Good morning. Happy Thursday to everybody. About halfway through December. Can you believe it? Whew. Time flies, right? Time flies when you're having fun. Time flies when you're not having fun. Let's see. Why are you not live on Facebook? Well, there we go. Okay, we're up and running. All right, good morning to everybody. As always, we're going to give everyone just a few minutes to jump in and say hi when you get here, guys. Let me know if you're new, where you're watching from, and say hi. If you are watching this, I'll always talk to my replay people first because those are normally the only people that watch this part. Because, everybody takes a minute to get the notification, jump in. So if you are watching this on replay, if you have questions of your own, the best place to put those is in the Facebook group. And that Facebook group, if you're not in it, is Money, Tax, and Finance for Small Business Owners. And the best place to put those is on the announcement for the next live. We're not sure when that's going to be right now because we are closing down shop for a couple of weeks at the end of the year, kind of. We'll still be working, but just kind of playing some catch up, getting ready for tax season, things like that. So the best place though to put it is in that Facebook group. If my team's pretty good at tagging me in things or collecting those questions for me for these lives. Today is our last one of 2021, y'all. It is the last live of 2021. Next week is the day before Christmas Eve, which I haven't done anything for Christmas yet, you guys. I've not Christmas shopped. The tree's been up and the house has been decorated since like November 7th, but there's been no shopping done. So yeah, that's probably what I'll be doing next Thursday instead of here on the live with y'all. As you guys jump in, let me know you can hear me. I see the number going up and down pretty significantly. So I want to make sure that you guys can hear me because a lot of times that is what happens. But it says my mic is working, and I assume y'all would let me know that you don't hear me. Yes, Wendy. Hi, Wendy. How's brother in Florida? It's sunny here, but chilly. I think it's going to be like 46 for a couple days. 40s, not 46 exactly. But all right. So you guys, these updates and Q&A sessions, I do have a couple quick updates, nothing very intense. So the 71 and sunny, Wendy says, sorry, didn't mean to interrupt myself. Who interrupts themselves? This girl. 71 and sunny, I love it. So I have a few updates to run past you guys as we are in the year end and we're coming up on year end. A few things to chat with you about, but really the main purpose of these lives, you guys, is for you guys to come in here and ask your questions. I have one, I think, predetermined question from the group, but other than that, it's all you. So if you're here live and you have questions, please post them in the chat. If you are watching in Facebook, there is a thing at the top that says I'm using StreamYard, and if you want me to know who you are, click on that. Otherwise, you'll just come up as Facebook user, and I like to actually know who I'm talking to. So, all right, so let's go ahead and get started. So the only true business update I have to you guys, for you guys today, is on the retroactive termination of the employee retention credit. So I always like to kind of give you guys background. So the employee retention credit, right, created way back with the CARES Act. It was a credit originally created, and they told us that that we as business owners could not take the ERC or the ERTC if we got a PPP loan. So we didn't really focus on it because the PPP loan ended up being more beneficial. Roll in December 2020, and guidance says, just kidding, you can take both as long as you're not using the same payroll dollars for both. And so people could then retroactively get their 2020 ERTC credit by filing amended 941s or amended payroll reports. Side note, I know that some people have started receiving their credits or their refunds for the amended 2020 payroll reports, but not many. You guys, I personally don't have any clients or affiliates or acquaintances or anyone who's actually seen any of those credits from 2020. So that's usually a question I get, especially if Mark is here, that have we seen money from 2020? And rumor is some people have. I do not know of anyone who has yet. So, all right, so 2020 credits, you could apply by filing amended payroll reports. Roll in 2020, they changed the rules of the credit a little bit. They extended it through December 31st of 2021, kept with the, as long as you didn't use PPP dollars for the same thing as you used that you were claiming ERTC, it was fine. Then we roll into the last bill that was passed, and it went into it became a bill in like August. And in the bill, it said that we're going to end the ERTC early. We're going to end it September 30th, 2021, instead of letting you have it for that fourth quarter, right? With a few exceptions. Okay, they made a few exceptions for, I don't remember the exact wording, but very hard hit or up. I'll have to look up the names. But anyway, so they essentially, for most of us, right, if you just were getting the ERTC based on reduced gross receipts, you weren't going to be able to qualify for it. They were getting rid of it for fourth quarter, all right? But it was just a bill, right? We just, back in August when they proposed it, so we're like, well, what do we do? So people kept getting their credits. And also at that time, remember, you were also able to get an advanced payment of a credit, right? You were able to fill out a form to get an advanced payment on credits for the rest of the year if you believed you were going to qualify for it. So this early termination of the ERTC was going to be a mess. So it was presented in August. We were a little panicked, but we're like, and then September 30th passed. And we were sure, guys, that they were going to take this out of the bill, because why would you retroactively make something effective, right? Like, that's crazy. They did it anyway. So the guidance that came out last week was, what do you do retroactively? So there's two things that could have happened. You could have received that advance payment, meaning you applied I think it's a form 7200 or maybe a 7202, but you applied for an advance payment of the credit that you believed you're going to qualify for in future quarters. Fourth quarter 2021 being one of those quarters, because originally we were going to qualify for it, right? So if you received an advanced payment of your fourth quarter credit that now is gone, or because they didn't actually pass this bill till November something, right? We're halfway through fourth quarter by then, right? Fourth quarter starts October 1st, and it was November before they passed something. So those people who were going to take the credit on their fourth quarter payroll reports were underholding their employment taxes, right? They were underpaying their taxes because they were planning on having this credit to pay it. So what they came out with last week is basically, yes, you have to repay it. This is not a loophole to getting this fourth quarter ERTC that they got rid of, but there will be no penalties if you repay the amounts due by the due date that your return is due. Meaning, if you received an advance payment for fourth quarter, you got to pay it by the time your fourth quarter 941 is due. Or if you got advance payments, if you reduced your employment taxes through your payroll company for October and part of November till they reverse this, officially pass the bill, same thing. There will be no penalties if you repay it. So thanks. That's not great news, but that's all I've got for you on that front. If you guys have questions on that, definitely ask them. But it's just, man, it was a blow, because we were so certain that they weren't going to, once fourth quarter started, we really thought they were going to take that out of the bill, but they didn't. So, I did look, the recovery startup businesses are the ones that can still get it in fourth quarter of 2021. They're called recovery startup businesses, meaning exactly that. You're starting up in pandemic recovery. So there's specifics on that if that's you. All right, a few other All right, a few other updates for y'all. So for those of you, if any of you, I don't have any clients, I don't think, in Kentucky. I can't think off the top of my head if I do. But for those of you, if you are in Kentucky and you are a tornado victim, the IRS is extending the 2021 tax filing deadline and all other deadlines to May 16th of next year. So there's that, which, let me tell you, if you are actually a victim of those Kentucky tornadoes, your taxes are the last thing on your mind right now, because that shit just happened. Okay, so let's go with a few year-end reminders, y'all. So if you are someone who is taking required minimum distributions, meaning you're getting retirement, or you're a financial advisor, a tax accountant, tax accountant who has clients, remind them that they must take their RMDs, or required minimum distributions, by December 31st of this year. In 2020, the CARES Act said you didn't have to take RMDs. In 2021, that doesn't exist anymore. So if you're required to take the required minimum distributions, you must take those by December 31st to avoid penalty. Another year-end reminder that there is an additional, what we call above the line deduction for charitable contributions. So normally this is not a business item, this is a personal item, but normally charitable contributions that are made, they're itemized on your Schedule A, right? So you only benefit from charitable contributions if you itemize on your 1040. However, in 2020, they made a $300 per individual exclusion for that, or not exclusion, above the line, meaning even if you took the standard deduction, you could also take an additional $300 per individual, so $600 for filing jointly, additional deduction for charitable contributions made in that year. In 2021, they've upped it. It's I think so. Let me make sure. Yeah, it's $600. So just make sure. Nope, it's $300. I'm lying. It's $300 per individual, $600 per couple, for gifts to charity. So if you have not made those contributions yet, and I know some people haven't because they're like, well, I'm not itemizing, so I'll wait till next year, but for whatever, blah, blah, blah. You can take up to $300 per individual, even if you don't itemize. All right. So make those charitable contributions. Let's see. Child tax credit payments. So those advance, right? So those advance child tax, go ahead. The advanced child tax credit payments that people have been receiving since July on that monthly basis. If you didn't receive them, or maybe you didn't receive enough, remember that you can claim any missed payments on your 2021 return. And you need to anyway, because remember that credit was only for up to 50% of your total anticipated credit. So you'll be able to get the other 50% of your credit when you file, and any missed payments can be claimed when you file that 2021 return as well. This one makes me laugh a little bit. They updated the 2020 recovery rebate credit FAQs. Like this, yeah. So, but there is one part that we do care about in this guidance, and it's correcting issues. All right. So I do have some clients, or some people are like, so remember your 2020 RRC, rebate recovery credit, or your stimulus payment, right? So think way back to last year, in anytime between April and the summerish, you received your first economic stimulus payment, or your first RRC. Then they gave a second one in December 2020 / January of 2021. Those are 2020 credits. All right, guys, those are 2020 credits. All right, so if you did not claim your RRC on your 2020 return, so you missed it, you just didn't, right? You didn't get it early, right? You didn't get that prepayment last year earlier, and then you ended because you didn't qualify. And then you filed your return and you should have qualified, but you didn't claim it. You should file an amended return to claim it. Okay. If you did not claim it at all, you should file an amendment to claim it. However, if you filed your return and you just claimed the incorrect amount, they'll handle that. Okay. They being the IRS will handle reconciling that. Okay, so if you did not claim the recovery rebate retention credit, the RRC, or your stimulus payment, when you filed your 2020 return, if you did not claim it at all, but you qualified for it, you need to file an amended return. If you claimed it, but you claimed the incorrect amount, the IRS will reconcile that. Cool? Cool. All right. I feel like I got one more. Nope, maybe not. All right, questions. All right. So I am a day trader. I want to ask if I can use Section 179 to buy trailers and deduct it as leasing equipment. If you're a day trader and want to ask if I can use Section 179 to buy trailers and deduct it. Okay, so day trading has more strict rules in terms of defining whether you're actually a legitimate trader business. Okay, so as a day trader, if you've gone through that and you're like, yes, I am a legitimate trader business, I am filing a Schedule C, it is legit, it's not me just trying to skirt some rules and get some extra deductions. As long as you are a legit day trader as a legit trader business, then you can use Section 179 to buy anything, as long as it's related to the business. So I'm not sure. So you got to remember that in order to deduct a bit, let me back up. In order for something to be a bona fide section or a bona fide business deduction, all right, it has to be ordinary necessary in your trader business. All right, so you would have to justify why you need this trailer for your day trader business. All right. And then as long as you're like, yes, it's ordinary, whatever, yeah, then it can be it's a qualified business expense for sure. There's just a lot of making sure the day trading is legit, making sure the expense is legit. And just remembering that in order to take expenses, guys, you don't have to prove anything, right? I fill out my tax return and I can put whatever I want on my tax return. But when I get audited, or if I get audited, that's when I have to be able to support it. Okay, to support those deductions and those expenses. All right. Wendy, do you have a local office number for the feds? I have a client looking for a refund from 2019 tax year filed in 4/20. Can no longer watch it on the website. No answers when calling the 800 number. We are dealing with the same thing. Oddly enough, we have a 2019 tax return with a huge refund that still has it's in processing, right? And we filed ours. You said you filed yours 4/20. We filed ours a little later than that. Can no longer watch it on the website and no answers when calling the 800 number. Wendy, I'll look and see if I have a local office number in my to-do. Let me know. I'm assuming you mean Colorado. But yeah, let me know. We'll take that off. Wendy says this is cash only again, right? Okay, so Wendy's talking about the charitable contributions, that extra $300. And yes, those are cash charitable contributions to an official 503C, legit nonprofit. I always get my letters mixed up. Jackie says, hey. Okay. Let's see. Why does it say hide? I don't want to hide. Oh, that's why. Okay. So the other question I had, you guys, that came in before the live from somebody was related to the ERTC, the Employee Retention Tax Credit, and it's talking about how you qualify, right? So the ERTC, they had rules, right? So in 2020, you had to be able to show a certain decrease in revenue. And in 2021, you had to show a certain decrease in revenue in a quarter. Okay. And for that quarter, you then qualified for the ERTC for that quarter and the next quarter. So let's use first quarter of 2021. You had to show an 80%. You had to have showed, there's two ways to phrase this. You had to show at least a 20% decrease in gross revenue, meaning your gross receipts are 80% or less of what they were in 2019. All right, so let's say first quarter 2019, your revenue was $100,000. Then in quarter one of 2020, your revenue had to be $80,000 or less, right, to qualify. Okay. So when you qualified, boom, I qualified for first quarter. Then regardless of what your receipts are for second quarter, you qualify. You always qualified for one like cushion quarter. Okay. So this question was, okay, I qualified in quarter one, but then didn't qualify in quarter one. So and I know this person qualified in 2020, right? So qualified in fourth quarter of 20, right? Which means they got to take the credit in fourth quarter of 2020. And then they also get to take it in first quarter of 2021 based on those rules, right? Of that one quarter cushion. Well, their quarter one revenue was up. Okay. Their revenue for quarter one was up, meaning that they didn't qualify for quarter two, right? Based on that cushion. However, then their quarter two went back down, right? So they requalified. So the question is, if it goes up and down, can you qualify? Yes. Yes. Your quarter, so that second quarter, when he shows that qualified decrease, he gets to qualify for the ERTC again for that quarter. So that was Mark. Great question, Mark. All right. Is there any good books that go over what deductions SBO LLC can take? Found a book called 475 Tax Deductions for Business and Self-Employed Individuals by Bernard B. Karnikoff, CPA. Bernard, he sounds familiar. I wonder if I read that early in my days. I wonder how old is that book? I assume it's not old, but I think he's been around for a while. Are there any good books that go over what deductions you can take? I don't learn in books, not tax stuff. Eek, sorry. But I can look. I'm sure, we all learn differently, right? And for me, I watch stuff. Like I take webinars, I take video, everything for me is watching. That's how I learn tax stuff. Other things different, but for tax and accounting, it's all, I have to watch it and listen to it and see it. So let me put that down. I can make a list of some resources that I love. Tax deductions for biz. Okay. So that's something I can post in our Money, Tax, and Finance group. I think you're in there. I know you watch me on YouTube, but I think you're in my group already. But that's something we'll add, and hopefully we'll put that up hopefully in the next couple of weeks. Let's see. 2019 13 edition. I learned better with watching too. If you got some, okay, perfect. So that's all I'll do. I'll add that to my list of things to put in that group, you guys, and some resources for you guys, some other resources outside of us. And that's something I like in a training I can do as well. Like I did one a while ago on the most commonly missed business deductions. So you might find that in the archives. Otherwise, it might just be time to roll that back out and do it again. So, all right. What do we got? No more questions there. I don't see any more in the chat. Let me just make sure I got all my updates looked over. Let's see. Did that. I think we covered everything, you guys. There's not a whole lot. Oh, I do want to just talk really for a quick second about the Build Back Better. Hold on. Let me answer Mark first. So I'm a day trader and my grandpa cooks and cleans for my business. I haven't paid her read Bree. I haven't paid her anything all year, but if I write her a check at the end of the year for the full salary, is it deductible? So same thing. It kind of goes back. So cooks and cleans for your business. That's where you're going to get into kind of that shaky ground. Because if you were a B&B, right, or an Airbnb or a hotel or something, then somebody cooking and cleaning for your business, that is ordinary and necessary, right? But as a day trader, like how does that relate to running your business as ordinary and necessary? And again, if you can justify that and you can answer that question, then yes, that expense would be deductible. And the question about paying her at the end of the year, you can do that. It's frowned upon, but you could do that. You would have to make sure you run her, are you going to run her as a 1099? Are you going to run her as a W-2 employee? If so, make sure you pay the payroll taxes and you run it right. all the things, but there's different steps, right? So it's first, is this expense ordinary, necessary in my line of business? Okay, in my business. And then if it's yes, then you want to make sure you're doing it right. So that's when you're like, is she a 1099? Is she a W-2? And making sure you follow the right processes for that. All right, Mark. All right, Wendy. When making a donation to a nonprofit and it be taken as a business deduction since the money is coming from the business. Okay. That is a great one. So only corporations actually can take a business deduction per se for charitable contributions. For all other businesses, you guys, so for S Corps and for partnerships and for Schedule Cs, the business can make them. You know, they can use business funds to make them, but when it comes to the tax return, it flows through to the 1040. All right, it flows through to the 1040. So keep that in mind as a business, that if you're like, oh, well, I'm going to donate $1,000, right? But if you're not itemizing, that's not $1,000, deduction to you, right? Whereas if it's advertising or, something else, that's a straight business deduction. All right. So I'm going to say that one more time. Business paid charitable contributions that are deductible, right? Like they say, yes, this is to a qualified nonprofit. It is definitely a tax deduction. So how do you treat it? If you are a C corporation, it is a business deduction. There are limitations, but it's taken straight on the corporate tax return. If you are anything else, an S Corp, a partnership, or a Schedule C business, then you can pay it on your business, with your business funds. You can put it through, business funds. You can put it through the business. You can spend it, your business funds on it, but it's going to be reported differently on your tax return than all of your other business expenses. In that, it's going to flow through to your 1040, normally to your Schedule A itemized deductions, meaning if you do not have enough itemized deductions to itemize, then it's not going to provide you that benefit. This year, there's that $300 or that exception, but we call it above the line deduction exception that they've created. All right. All right. We got just another minute. I just want to talk real quick, not long, about the Build Back Better plan. And just say it hasn't passed. That's all I want to say about that. They have a Christmas deadline right now. So we're going to see, is it going to pass? We don't know. There are a number of tax items in here, but not a whole lot that apply to us here, right? Small business owners and individuals. There's a lot of corporate and qualified stock and what other kind of rules? Excess business losses that may or may not pertain to y'all here in that. And when it passes, we'll talk about it. But until it passes, I don't want to, because who knows if it's going to pass? Who knows if it's going to pass unchanged? We don't know. So, all right, let's see. It looks like we've covered all our questions. All right. Okay, remember, this is our last training of the year. Next week is Christmas Eve, so I'm not going to be here. Week after that, I'm going to be in Montana with family. And the week after that, we're closed. And so I will have a schedule up. That's part of what I'll be doing over these next 3 weeks, in addition to hanging out with family, is kind of outlining my next year's plan. So we will have a schedule of when these trainings will be, and hopefully have that up on the Facebook page as a calendar. So it probably won't be every week, you guys. I'm guessing, just based on all the data we have, it's going to be monthly or biweekly. We got to figure out, based on our schedules, what we want to do with that. So we'll have that set up when we meet for the first time in 2022, sometime in January. All right. With that, you guys, have a great Thursday. Have a great weekend. Have a great Christmas if you celebrate. Have a great New Year's. And we will chat with you later.